Good morning, everyone. I'm Jim Prince, and really thankful that you're here with me today. We're going to spend, I don't know, the next 20 minutes, half hour, looking at some news, looking at some markets, and talking about possible price activity here for the upcoming week in several of the markets. So we'll just kind of get rolling here. And first, before we get started, of course, we got to talk about risk. Of course, any trading on Nadex or any other type of trading for that matter involves financial risk. So make sure you use good old common horse sense and only trade with risk capital. That of course is money you can afford to lose. You don't want to be trading with food money or rent, that sort of thing. So always take that into consideration. Nadex is a fantastic platform, but remember, of course, you can have some losses, so you got to make sure that that is risk capital that you are using. All right, there's me. Just a real quick tidbit about myself. I've been involved with the markets for over 30 years. We have what we call the greatest business on earth website. We have GBE binary. We developed the binary course here a few years back. And anyway, we're out in the Southern Oregon. We're about an hour or so from the Northern California border in the Rogue River Valley. All right, so here's what we're going to do next. We're going to look at some news events, and I have a couple of different sources I like to look at, and I'll show you those here in just a moment and show you how to get to them. But most of the news has already passed by here this morning, and that happened at 8:30 a.m. Eastern or 5:30 Pacific. But we will look at the news for the rest of the week here as well. So here are the sites that I prefer to review. I like forexfactory.com, and I also like myfxbook.com. So what we'll do next here is let's just kind of mosey on over to those sites, and we'll look at the calendars. Okay, so this is the economic calendar for forexfactory.com. So if you just come to forexfactory.com, click on their calendar link, this is how it will load up. And what I like to do, though, is focus just most of my efforts here just on the news events that have the red folder. Those are high impact news events. Those are the events that are typically going to move the market to some degree. So what I like to do is I like to filter out the rest of the events. So I come up here to filter, I click that, and I just uncheck these other boxes, these other colors, and I just leave the high impact or the red folder on here and click apply. And then it really narrows it down. I don't need to be concerned about the events that aren't going to have an effect on the market at all. And here you can see, for instance, the news events that came out here out of the U.S. at the bottom of the prior hour here at 8:30 a.m. We had core durable goods that came out. And then later tonight, we have out of Australia, we have retail sales, and that is at 8:30 p.m. Eastern time. These are all Eastern times. No big high impact events on Wednesday or Thursday this week, but we do have high impact events here on Friday, and you can see that involves the Canadian dollar. We have the employment change, unemployment rate out of Canada. Then for the U.S., we have the average hourly earnings, non-farm payroll, which is the this one here, and then we have the unemployment rate. So those events will have an impact on any currencies associated with the U.S. dollar or the Canadian dollar. Now, the reason I like to know when these high impact events are coming about is because I don't want to be taking a position in the market right before those events. I don't like to trade the news that way. I like to let it come and go, and then I'll be looking for events. So like I mentioned, we already had some news here earlier this morning. So that's Forex Factory. So you can see the news has already come and gone here today. We do have, as I mentioned, the news out of Australia here later today. So we will look at the Aussie dollar here in a little bit, and then the big events on Friday. Now, the other calendar I like to look at here is this guy, My FX Books. This one's a little bit more involved, and it will even pop up audio alerts for you. But if you come to myfxbook.com and then just search out their calendar, you'll see this page. And then what I like to do is come up here to more, click that. And again, I'm just unchecking events I don't care about, the no impact or low impact. And you can leave the medium impact. They do their news ranking a little bit different than the Forex Factory does. You can also select the countries you want to view here. I'm just going to leave it at this with the high impact here for the moment. And we'll just come down here and click on save right here, and it'll load that up. So now you can see all the high impact events according to my FX book. And here for today, you can see the news events that came out. And if you're not sure what country, you can just simply hold your mouse over the flag, and of course it'll pop up and tell you exactly what that is. So here you can see there's the news out of Australia here, their trade balance here later this evening. All right, so high news events, you can see a little bit different where forexfactory.com did not have any news events for Wednesday or Thursday. You can see they clearly do here at MyFX book. So you'll probably want to use either both of these, or at the very least, I would say my FX book, just because you get this little bit more information out of this. All right, so we have that in mind. We know that we have some news coming up here this week for the US dollar, the Canadian dollar, and this evening for the Australian dollar. So let me bring over my charts, and we'll just start taking a peek at some of these different markets here. So what I like to do is I like to trade or analyze a market from the top down, and I use multi-time frames. So here on your screen, you'll see the quote board in the upper left corner. Primarily, most all the markets that trade on Nadex are listed here. There are a couple that are not, but for the most part, that is every market that's traded on Nadex on the quote board. And within my charts, what you see here is a breakdown of charts in multiples of 3. So for instance, the chart at the top here in the center, that is a 3-minute chart. And then to the right of that's a 9-minute chart. In the lower left corner is a 27-minute chart, 81-minute, and 243. And a couple of other ones here. We're not going to get into all those today, but let's just start here. I want to, as I mentioned, look at the Australian dollar here. So it's the Aussie dollar, US dollar Forex pair. And we're going to start here with the 243-minute chart, essentially a 4-hour chart. And once again, good morning, everybody. Really glad you're here today. So I'm a trader that really relies on visuals and support and resistance. Support, resistance, chart patterns, momentum in the market. Those are my keys, my strong points as far as analyzing the market and looking for trading opportunities. And you'll see here on this chart, if you look where the price action is, we actually have a couple of different moving averages on here, as well as the price action. And I've drawn out some support and resistance zones. So the green area, green rectangle, represents a support zone that I've extended to the right, and the red one is a resistance zone. And you can see the market's kind of trading in between those levels. Those are more high impact, if you want to say that, as far as the chart is related. And I also sync all these levels onto the other time frame, so I can really kind of get a microscopic view as I work my way down in my analysis process. But here we can see this is again the Aussie dollar, US dollar. Based on this 4-hour chart, it's come down into a support area here just above this horizontal line that I have drawn. This is my momentum indicator, and when it flips to red, that is a pretty strong momentum to the downside. But one other thing I've added to this indicator, this is only available here on Bar Chart Trader, but the indicator changes color. So as it gets lighter, that means momentum is weakening in that direction. Not telling me it's going to end, but just that it's weakening. So I look at this and I can see there's actually a double bottom right here. Grab my pen here and I'll point that out for you. So we have this low here as well as this low here. I also see a possible double bottom forming here on momentum. So we could see a reaction off of these levels. My cycle study, which is a stochastic, right down here, possibly in an area where it could bottom as well. So whenever a market moves into these support resistance levels, I'm looking for a reaction or some sort of bounce off of that level. Now with the upcoming news, we have kind of a slowdown here in the market here, the Aussie US dollar, excuse me, but this double bottom, we could see a reaction here. But at the moment, of course, we are down here off these lows. So I don't like to sell into support. I'd much rather buy support. So what I want to do here at this point, we'll just kind of work our way down quickly. And if you have any questions please feel free to ask me. Yeah, so why a 243-minute chart? Simply because it is a multiple of 3 when I start out at the 3-minute. The 3-minute chart is actually what I call my setup chart, and I use that as my my guide primarily. So we'll work our way down here. I think you'll get a better idea. So the next one down, so if I divide 243 minutes by 3, I'm going to come down to an 81-minute chart. Most traders are probably looking at it at a 60-minute chart, which is perfectly fine. It's just I do things a little bit differently. Here you can kind of see a little bit clearer this double bottom I was just pointing out. And you can see how momentum is actually bouncing off of these lows as well. So no clear sign yet, but the double bottom could lead to a reversal or a bounce. And then this very bottom indicator is one that I developed to help me identify divergence. And it works pretty doggone well. If we see divergence set up here, I will definitely point that out as well to you. So the divergence, if you're not familiar with that, it's basically pointing out the possibility of a possible turn in the market. All right, so let's do this. We'll work our way down here because we have a few markets to get through this morning. Next, I'm going to come down. So if I divide 81 by 3, I'm going to come down to a 27-minute chart. A lot of traders are probably looking at a 30-minute chart. All right, so even more so here, you can see it much more spread out. We have a low and a low over here. So that's the double bottom we first saw on the 243-minute chart. And I also see that we have a potential double bottom just forming right here. This could be the midpoint, and we could see price drift back down here a bit. But momentum is pretty strong here on this half-hour chart to the upside. Oscillator moving down. So at this point, though, you can see that price is really kind of locked in between these two levels here. And if the market's in the middle of a range, it has a 50-50 chance of going either direction here. I'm not seeing really any clarity at this point. And this often happens ahead of news events. So, and again, if you just are joining me this morning, there is news this evening out of Australia. And since we're looking at the Aussie dollar, US dollar could have some effect on that. And things may wait for those big news events to pass. All right, so let's just keep rolling here. We'll work our way down to the 9-minute chart. So 27 divided by 3 is a 9-minute chart. So here's a little double bottom. And I also see a head and shoulder pattern here. So we have the left shoulder. Gosh, we could call this the head. We could even call this whole area the head, and a right shoulder here. And the oscillator trying to hook up. So remember, we had on the much bigger scale, we have a large double bottom. And inside that large double bottom, now I'm seeing a inverted head and shoulder pattern. Momentum has kind of gone neutral through here. The oscillator is trying to bottom out, suggesting that we could see a push up. But again, we're kind of locked in no man's land here at the moment. So not a lot of clarity here. This will be a market as we move into the news later this evening. You want to keep an eye on for possible opportunities. At the very moment here this morning, we're about, 11 or so hours ahead of the news. It's going to take a while for things to unfold. And then we come down to the 3-minute chart. So I think we'll just kind of stop here with this one. But here again, you can see, if you're familiar with chart patterns at all, so we have a large kind of head and shoulder pattern. We could even call this a little tiny double bottom pattern that had already developed. Inverted head and shoulder, anticipating if the pattern were to follow through for the market to move up. But at this point, there's not that clarity there. So we need to wait and check on this market here later this afternoon, early this evening, and see if there's any sort of clarity there. All right, so let's move on from there. We do have news, as I mentioned, later here in the States, and what I want to do next is let's come down here to the US dollar, Canadian dollar, because we do have big news coming out on Friday, and we can kind of get a rough idea here what's going on with this currency pair. So US dollar, Canadian dollar, again, the green zone area that I've marked on the charts, the support zone, and then I have a red resistance zone. And when the markets move to these areas, I anticipate some sort of reaction. And I'll show you here real quick what I'm talking about. This will give you a little bit more clarity. But right here, we had kind of a double top. And this formed, and these are the situations that I love to see when we have these types of double tops in a resistance zone that I have marked out here. When we get some divergence on my momentum indicator. See how we made a high and a lower high, and here we have essentially equal highs. So divergence leading into it, and the market just tanked right through the support of the moving averages here, and eventually worked its way all the way down here. So what do I see now? Well, I see a bit of a retracement here off of the support zone. So what I like to do is when a market moves into these support or resistance zones is look for these chart patterns, reversal patterns to develop. And if I find them, then I work my way down to see if I can really fine tune my entry and reduce my risk. So rather than taking an entry, say off of the 4-hour chart, the 243-minute chart, I may be able to take a much more qualified entry off of a 3-minute chart and really kind of fine tune my entry. So if you think of top-down analysis, if you're not familiar with it, you're holding a leaf in your hands. You're looking at it. Maybe the next level is you grab a magnifying glass. You can see more detail that way. Maybe the next level, you look at it under a microscope. Very similar here with using top-down analysis. All right, so we have this little bounce here. So what I'd really love to see here is the market react off of this resistance here, pull back, and maybe set up a bottoming pattern here on this time frame, because I see equal lows on my momentum indicator, equal lows on the oscillator, and we did have some divergence right here. Look at this, from that low in price to that low on the indicator, and look at this higher low right here. This went from low to lower low, this goes low to higher low, we got a bounce. So this is the tools that I use to analyze these markets. So rather than get caught up in all this here, just kind of keep moving forward, and we can take a look here and see if we have any other opportunities in this market as I work my way down here. So let's go down to the next level, which is this chart, the 81-minute chart. And you see this dashed line that I have drawn here, the angled gold color one. That is a resistance line, and the market is moving up, tapping on that resistance level. Just hit it, bounced off of it, is now working its way back up. So we have a whole resistance area right here, horizontal chart resistance, as well as angled trendline resistance. Momentum, though, is increasing. So I like to use the indicator to help me indicate, get some clarity on momentum in the market. That's why I developed this. We are angled up. I look at the angle of that. I'm looking at the color of it. So when it's blue and angled up, that's pretty strong momentum here coming off these lows. Right, so, but we're moving into resistance. So we have to keep all that into consideration. Let's come down here. And again, you can use a little more clarity here as far as that resistance level goes, but we're seeing some momentum to the upside. So now what I want to see as we are coming into this resistance, how the market is reacting on these smaller time frames. And I see kind of across the board, if you just look quickly here at all my charts, we have, if I look at the angle of these two indicators, the lines on every one of these charts, that's showing me where the energy is in the market, where it's headed. So on these upper time frames that take precedence, so a 4-hour chart has more impact than a 3-minute chart. So if the 4-hour chart show me energy to the upside, that's what I want to look for as a possible setup in that direction. So now you can see if we look at the 9-minute here, it's still angled up. This is hooking over a bit, and this is telling me the cycle of the market. So I want to wait to see if I get a retracement to take a potential long position in the direction of all the energies here on these higher time frames. Does that make sense? Just trying to trade the energies in the market between these support and resistance zones, and I use chart patterns to help identify those possible situations, those possible setups. All right, so as we move down here on the 3-minute chart, we can come right in here and you see there's actually a triangle pattern, or almost a flag pattern, which is a trend continuation pattern, or more or less a bullish chart pattern here at this point. Now, I don't want to buy right here because you see this is okay that on the smaller time frame, the energy is moving lower, but I want this to kind of come down here and bottom out and hook up. So that may allow price, excuse me, to come right down into here and kind of test those moving averages as well as these highs in price. Let's look for a bounce and a potential move. Now, again, I'm looking at these levels, these zones that I have marked on the chart, whether they be the colored zones or the trend lines, looking for the markets to move to and from those levels because support and resistance acts as magnets. Now we're right up against this resistance zone here on the higher time frames, so we have to be very aware of that. So I want to bring this back up here just for a moment and show you that, just so that you get that clarity. If you can see here, the price is currently at 133.26. A move up to here would be 133.41. So you're still talking about a 25 pip move up to this range. But as price gets near these highs, if it does indeed get near these highs again, it's going to have some difficulty. It'll start to slow down a bit before trying to take out the resistance area there. So at the moment, looking for some sort of bullish setup here in the US dollar, Canadian dollar. Again, remembering that we do have news here at the end of the week. So we still have plenty of time to trade this market if it sets up prior to the news. But we do want to be aware that if you're holding anything going into the end of the week. All right, so let me just mark this up real quick here for you. And let's see here, we're probably best to go. I tend to like to use wicks when I'm drawing these patterns, the wicks of the candles. And there you go. So there's the kind of a triangle. And then also, if I use the trend channel tool here, you can kind of get an idea on where the flagpole is. So if we look at that as more of a flagpole. So look at the this indicator here. Let me blow this up for you. So I look for my cycle study right here, which is a slow stochastic. I'm looking for it to move up through 50, which is the midpoint, or down through 50, because it's a bounded indicator. It has a floor of 0 and a ceiling of 100. So that's the halfway point. So you can see here now, well, you can't quite see it here, but underneath it, it is currently at about 46 and change. So it's breaking through it, but we want to see it stop and hook up. And the ideal areas for entries are the extended areas down here on this lower line around 20 or up here around 80. That's where you tend to get the better cycle. So we may see the market break through my lower trend line and maybe set up a kind of a new area for a possible bullish opportunity or entry opportunity. Again, we have all the energies on those upper time frames pointing to the upside. We do have a resistance or ceiling not too far above us here. We were able to see that on the 4-hour chart, the 243-minute chart, and the 81-minute chart. So we do have some room. We just don't have a lot of room. So that's what I'm going to be watching this for possible setups here later today, and as well, of course, going into the latter part of the week. Now, when Friday comes around, I'll more than likely be flat on any sort of these types of positions in this pair, just because of the non-farm payroll report, which is a big event. That's a once-a-month event. By the way, I did not mention that earlier. Usually it comes out the first Friday of the month, if you're not familiar with that, and it is a market mover. Excuse me, it'll move the currencies, the indices, the metals, even to some occasions the energies, and of course the financial markets as well. The only time it's usually not on the first Friday of the month if there's a holiday right around that time frame. All right, so zipping through here, we've covered the Aussie dollar, US dollar, the US dollar, Canadian dollar. Let's look at the stock indices here. These stock market here in the US opens here in just a few minutes. You can see here 6:24 my time, so in about 6 minutes. Let's take a look at the S&P And you see here, I've already pre-marked out these zones coming in today, but one of the things, what I want to show you here is a daily chart of the S&P. If you haven't looked at this, again, this is the E-mini S&P 500. If you've never traded it before, you can trade it right on Nadex. The equivalent would be the US 500. The market is breaking out of this zone that I have here, right here. And this resistance zone popped out of it yesterday pretty solidly. Today is breaking up towards those highs again. You can see I have several levels marked off here. Then we have a big resistance zone up here at the highs for this contract. Now, this is just the daily June S&P or E-mini S&P 500 contract. So momentum is starting to rally here off the daily chart, but it's been pretty flat, and that's why we've kind of had this kind of zigzag here type of pattern over the, gosh, when did this start? Back in the middle of March, so the last couple of weeks, right through here. Now trying to break out to these highs, and the next level of resistance on the daily chart that I have is right here about, what is that, 2891. And that is about 20 points above us at the moment. So let's go down here. So I also have the 729-minute chart. Because if I take 243 and I multiply that by 3, I get 729. And you can see those levels, I think, a little bit clearer here if I zoom in. Right there, how the last couple candles clearly above that resistance zone. So let's work our way down here. We'll come down to the 243. I know we're getting here to the bottom of the hour. And you can see here, so the market has really ramped up off these lows that occurred here at the latter part of March. Right off of support, by the way, this purple line is the 200 simple moving average, 200 period simple moving average. A double bottom, here's a good example. We were looking at a similar pattern earlier in the US dollar, excuse me. Double bottom on support in my support zone, right? And the market just, boom, took off from there. Those are the ideal type of setups. They don't come every day or every week, but when they do come about, we want to be on high alert for possible opportunities. So how many of you actually, or if you're doing any trading with Nadex, are trading the stock indices? Yeah, so I have a question here from Oren asking about, says I don't use bar chart, so for indicator substitutes, for on Nadex or trading view, can I use something else? Essentially is what Oren's asking. Yes, Oren, you can use any type of momentum indicator you can use on this, for instance, on this upper indicator replacement. For this one here, I don't know of anything that would replace it, the lower one, but as I mentioned, this is the slow stochastic. But your favorite momentum indicator you could probably use. All right, so a couple of you trading the S&P. So one of the heaviest traded, biggest traded markets on the planet. It's one to keep an eye on because it oftentimes will generate some good opportunities. I'm just going to quickly go through this. Let's come back down to the 4-hour chart. We have, what do we have? 6 on the 6th candle now above the zone here. Momentum starting to fade a little bit. I would not be surprised here to see the market trying to come down and test the bottom of, actually this is a support zone now. That's why I have a green, but the bottom of this zone here. That means 28.52. That's about a 20-point decline. It's not ready to do that yet, but I would not be surprised if that happened because of the fade we're getting here in momentum. And we do have divergence off my divergence indicator down here at the bottom. So let's just keep rolling here. Yeah, so here, we can see a little double top pattern forming right here. This is the 81-minute chart. And just from where price is at the moment at 28.71 down to the top of the zone here, which is going to be a support. We're talking about 28.65. So we're talking about 7 to 8 points down into that level, maybe another couple, but right into that support. Look at how momentum is put in lower highs right through here. This one though, if this turns over, that's when I would anticipate the market to fill in this range. I'll mark this in just a moment here, but the oscillator, if it hooks over here, that will be a key for me to try to look for a possible opportunity back to the downside here. And it may just be more or less for what I call a scalp, a quick scalp trade, where you're only holding it for a very short time. And here's the area that I would look for the market to potentially move through, right in here, to fill that in right there, especially if the oscillator does indeed hook over. Now that's going to take a couple of candles for this to unfold if it's going to move lower, because the oscillator is basing off of price action, and each candle here takes 81 minutes to form. So we also have a double top. So we have a double top here and there. There's the two highs right here and here. Also potential divergence here. This is diverging at the moment. It is not, we have to wait for this candle to close to see if that is actually hooked over. We do have divergence here and also here. And you see that? The angle of the lines, if you just focus on that, just to make it real simple here, horizontal on the price action, angled lower here on the indicator, suggesting a possible move to fill in that area of the ellipse there. And really there's support right here as well, so just above the bottom of that ellipse. All right, let's go down to the 27-minute. You really kind of see a snaking channel of the larger version of the double top. Here again, we have right through here is the high, over here as well. And let's get this back. There we go. So you can see there is some support on this time frame. Looking at, I also use the 50-period moving average and an 89-period moving average, this the red one. That's one of the most important moving averages I use in my methodology, as many times the market will react right off of that, much more often I think than it does on the 50 or on the 200. But you'll note that comes in right there, right? In fact, if I go back to that previous chart, let me sync that ellipse over that I drew, and you'll see that the 89 simple moving average comes in right at the bottom of the ellipse. So that's an important level here on the E-mini S&P. And you can see how the price is now working its way in. I'll just jump ahead here to the 3-minute and see how price is starting to work its way into that area. All right, so there you go. A quick look at what we got through 3 different markets here today. So you're not taking positions into the news. Now, if you get into a position, say for instance today, and you're holding it in through the news, that's one thing, because you may already have been able to take some profits off the table, right? Or you're able to protect your position via some sort of stop loss, mental stop loss, whatever it may be. But I don't take positions right into the news. I usually will wait for the news to pass by a good 45 minutes to an hour after the event is released. So we'll try to do this again next Tuesday. We'll do a very similar sort of analysis. If you have questions or thoughts or ideas, things you'd like me to cover, I'm happy to do so. Just let me know. And let me just kind of quickly scroll through here. So I saw somebody asked, Jesus asked about, could I do the Dow Jones? So we're actually out of time here this morning, Jesus, but the S&P is going to be very similar to the Dow. Let me make sure I can answer all these questions here. Yeah, great. And one of the things that, as far as discipline, I find that if you use multiple time frames, it'll really help open your eyes, because you see things that you normally wouldn't if you're just looking at 1 or 2 charts. If you can filter in say 3 or 4 charts. And even if you can't break it down to the intervals that I do, if you were to use, say, for instance, a daily chart, a 4-hour chart, a 1-hour chart, it may be a 15-minute chart, you'll see a lot if you're not already doing that. That can help out quite a bit. Yes, and the webinar is being recorded, and that will be available on the Nadex site, and Nadex will be sending out I believe they'll send out an email here a little bit later once it's available. See, Roger asks, says, Jim, when you say 3 trades a week seems a little skimpy. Roger, you can trade as much as you want, my friend. It's really, I believe that trading is all about lifestyle. So if you have the time and the the resources or what have you to trade, sit in front of your computer all day long and make a bunch of trades, that's fantastic. But if you've got a family or a 9-to-5 job or something like that, that's going to take up a lot of your time, then looking for 2 or 3 trades a week might be in your best interest. The biggest thing I can say about that is don't overtrade. If you get over trading, you're going to find that you can really burn through your capital pretty quickly. And that's one thing we don't want to do is overtrade, because it puts us in the wrong psychological area. All right, everybody, I think that's going to do it for today. Do you trade binaries on commodities? A couple more questions here. Yes, yeah, you have the availability to do that. We come over here to the Nadex platform. You can look right here. You have the commodity binaries on crude oil, gold, natural gas, and silver. You can also do some spreads on, let's see, there we go. We also include the soybeans is in there, and corn. But yes, I will trade Nadex binaries on crude oil and gold quite often. Probably the one that I give the most attention to would be crude oil. Next week, we'll try to look at that market. We can add it to our list here. All right, hopefully you folks, I was able to help you out, at least look at things from a little bit different perspective. You can contemplate what I was talking about as far as momentum. You can use your own momentum indicator, as I mentioned, and use support and resistance. I'm a big believer in that. I really try to keep it simple. Once you understand the process, it's just a matter of markets working from one zone to another. Yeah, so let me come back here to this presentation here, just 1 second. And we'll come over here. So if you need any assistance, want to find out more about what we have to offer, you can visit our website here at gbebinary.com, or just email our staff. Or if you'd rather actually talk to somebody, we have folks that are on the phone in our office, real people, okay? They're in the office from 8:30 a.m. to 5 p.m. Pacific time. And we pretty much base our office hours or our office days open around when the markets are open. So pretty much any day the markets are open, that's our time. And there's our phone number there. You can call us directly. We're again out on the West Coast. We're in the state of Oregon in the Rogue River Valley. And you can go here to GB Binary. By the way, there's a link there of an interview I did with Dan Cook from Nadex last summer. And I think it's about 13 minutes long, but you can actually hear Dan and I talking. I was 2 guys talking, trading, and having a beer. So you can try that or check that out if you're at all interested. Again, there's our contact. I really appreciate everyone being here this morning. And again, we'll do this next Tuesday as well. And as we get in a little bit more of a flow, we'll even hit some other markets, and I'll work my way through it. And of course, anytime you have questions, feel free to email me here at the support, and just make sure, if you would, so my staff knows to fire the question or forward it on to me, is that you say, hey, I was at the webinar this morning for Nadex, and Jim was chatting, so that way they can get a kind of a heads up. All right, everybody, thank you so much. Appreciate you being here this morning, and look forward to seeing you again next week. Take care, everyone.